Okay, so today's topic is types of doubtful debts. The allowance for the receivable is collected after all the irrecoverable debts have been written off. There are two types of amounts that are likely to be considered as doubtful debts in an organization's account. Number one is specific allowance. These will be some specific debts where the receivable is known to be in financial difficulties and therefore the amount owing from that receivable may not be recoverable. The allowance to be made against such a receivable is known as specific allowance, thus, it is against a particular customer's balance, either full or a part of it. And the second is general allowance. The past experience and history of a business will indicate that not all of its debts will be recoverable in full. It may not be possible to indicate the precise receivables that will not pay, but an estimate may be made that a certain percentage of receivable is likely not to be paid, and the allowance required against this percentage of receivable is known as general allowance. Thus, this allowance is against all the customers, not any specific one. So, how to calculate this allowance? There is a formula for that. The total allowance required, you can calculate this by adding specific allowance plus general allowance. As we have studied, the specific allowance is the allowance that is set up against a specific customer, and in question, you will have the customer's name in respect of the specific allowance, and then you will have a percentage of your whole receivables, so that you can calculate by applying the percentage to that closing receivable account. Okay, so there is a note. The balance on the receivables for the doubtful debts account is netted off against the balance on the accounts receivable account when preparing the statement of financial position. The allowance for the doubtful debt is a period and adjustment. The balance on the account can increase or decrease from year to year. General allowance percentage is usually applied on the receivables figure after deducting the specific allowance. And there are steps for the calculation. When calculating and accounting for a movement in allowance for the receivable, the following steps should be taken. Write off irrecoverable debts, calculate the receivable balance after adjusting of the write-offs, and ascertain the specific allowance for the receivables required. Deduct the debt specifically allowed for from the receivables balance. Be sure to deduct the full amount of debt rather than the amount of specific allowance, and multiply the remaining balance by the general allowance percentage to give the general allowance required. Percentage x bracket open closing receivables minus irrecoverable debts minus debt specifically allowed for bracket close. Add the specific and general allowances required together. Compared to the brought forward allowances, the allowances is from the previous year, and the allowances that you have calculated just right now, and account for the change in the allowance in the expense account. Okay, so now the next topic is aging analysis. These steps included in the ages analysis is usually a list ordered by a name showing how much each customer owes and how old their debts are. The credit control function of a business is use the analysis to keep track of outstanding debts and follow up any other overdue, and timely collection of debts improves cash flows and reduce the risk of them become irrecoverable. When using this method, different rates are applied on debts depending on the time for which they have been outstanding. Debts are grouped according to their age and allowance calculated.